Last week, when the markets were closing, the market was on the edge of its seat, wondering what was going to happen next with Iran and Israel. Also, I've been told that it's not Iran, it's Iran, so I apologize to anybody who was bothered by that.
Load off my mind.
Anyways, the conflict over in the Middle East was a big concern to the markets over the end of last week's trading. That being said, however, is that the market has shrugged it off here, and this morning we're actually seeing the Nasdaq, the S&P trade higher. So why is that? What turned around? Well, the market, remember, is forward-looking. So if you're looking at oil prices and wondering why the heck are they coming down, while there was a spike about the concern of what could happen, oftentimes in markets, once the cat is out of the bag, right, there's no going back. It's old news. It's behind us. The market trades on what is coming next. So if you get some escalating concerns going forward, is Israel going to retaliate? Are they going to do something bigger next? Then yes, you'd see a huge spike in oil again. But we don't know that, and that's definitely not my area of expertise, so I can't give you guys a solid this is going to happen or not. But it's something to think about. It's still in the back of our minds, but the market has for now moved past it and moved on to today's data, which has been retail sales numbers. We're going to talk about all of that, current setups, things I'm watching, and my trades in this video, as well as the commitment of traders data, which came in interesting. Let's jump in. So first of all, what we have the S&P up slightly on the day, Nasdaq also, Euro's down, pound is all over the place. The gold market has traded off of its highs, and the Dow's actually doing quite well today. The oil market again sold off here despite all of the concerns. You would think oil would be up, but it again is about what is coming next, not what has happened behind us. So concerns have now subsided, at least for the very short term, but elevated prices still remain for oil. Oil's still up quite a bit in the last month. And there is also pressure from other world leaders that don't want Israel to escalate things further, because of course it could just continuously cause an escalating cycle. Now, that being said, regardless of where you stand on the matter, in terms of a market-centric focus, if there is escalation, you will probably see commodities spike and the stock market sell off, and bonds could also catch a bid as people rush for safe havens. So keep an eye on that. Now, what the market is trading more aggressively off of, it seems like this morning, is the really impressive retail sales numbers that came out from the United States. What you can see on this chart, and if we could zoom in over here on the edit, what you can see is that we have this big blue column. What that tells you is that the retail sales month over month came out higher than the red dot forecast. So expectations were beat big time month over month on retail sales, showing that, again, retail sales were strong, consumer was strong. That's good for the US economy, and the stock market is liking that data overall here today. And again, bouncing back slightly from the geopolitical risks that we had on Friday. On top of that, they also revised the previous month higher. That's just something else to mention that we can see with the yellow line here on this chart. Next up, I'll give you a quick update on some of my current positions. I'm still long oil. I'm long silver as of last week. We shared that signal inside of the VIP room. And my FXI position that I sold covered calls against, the calls expired out of the money, so I still have my position, and I plan to sell more calls against the Chinese stock market FXI. Again, I have a position, I'm selling calls against it. That's what is called a covered call. You can search that if you'd like to, or if you search on Trader Nick, actually we'll pop it up in the top right hand of the screen. You can see my options trading strategy video there if you're interested. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer Ledger, even though it's somewhere in the cloud. And for viewers on my channel, you can get 20% off your first VPS by using the link and the promo code TN20 down below. Again, 20% off with the code TN20, which you can find down below in the description. Now we got to talk about gold. So gold had this huge reversal intraday Friday, but I want to show you something. I got so many comments this weekend on my videos and in my analysis video that I did on Sunday from people who were saying, you know, gold has topped out. This is the end of the run. It's going lower from here. Sell gold. I got so many of those comments. In fact, I'll show you a comment here. There was one comment that had like 15 plus likes on my channel. We'll pop that up on the screen here of somebody saying, you know, gold is topped. It's selling off. Let me just give you guys a fair warning. I have seen comments like that for months now. And the reason I bring that up is that, you know, when you're keeping an eye on the comment section every day, like we do on this YouTube channel, because we're constantly trying to work through the content, respond to people's messages and see what we can do to improve. We've had that feedback from, you know, traders for months, people saying gold is too high, it's got to come down. But this is not necessarily broken its upward trend in my personal view. And that's not even just in my personal view, there's several metrics that we could look at. For example, if we apply just a simple moving average on the daily chart, right? Many traders would say that the 9-period moving average hasn't changed. But what if we change it to the 20-period moving average? Well, it's still overall trending up. You can see there it is, just populated. It doesn't matter which moving average unless you're going like the 2 or 3 moving average. That would all show you that the trend is still up on the daily chart. But perhaps more akin to what we usually do on this channel, we haven't broken key levels of support. And so the bulls are still in charge. I want to show you one more chart before you get overly bearish and get too excited about this. Again, first of all, you're fighting an upward trend. Second of all, if you took this candle and you said, oh, it's a huge reversal, look how strong. Let me show you a chart that might be a little bit eye-opening to you. This is a line chart. This takes out the intraday volatility that can happen. And this chart is showing no signs of the trend being over. Now, is it due for a bit of a pullback? Probably. But betting on that pullback has cost people so many trading accounts, so much lost money. The trend is up until it's not up. Again, my personal opinion is stay bullish or neutral, but don't just short this thing just because it seems high. The fundamentals favor gold going higher in my personal opinion. And while we're on the subject, I'll show you a trade that I am personally in. I am long silver. Again, I mentioned this earlier, SLV. I'm up just a little bit on this trade. It's a very small size relative to what my gold trade was, but this is because, again, I recognize that the metals market is probably due for a pullback at some point. But again, conditions continue to favor bullishness, and sometimes people think, you know, it's gone too high and maybe there was a little bit of profit taking, but still I think the story is intact for silver. I'll show you the breakdown on the scoring. And when I refer to scoring, what I'm talking about is the Edge Finder's algorithm that looks at a ton of economic data, technicals, and sentiment analysis to give us bullish or bearish readings on various currency pairs, commodities, indices, etc. And silver has recently been added as a bullish current reading here on the Edge Finder. And what we're seeing here is that a lot of strong economic data, not the least of which of course is retail sales coming out strong today, is showing that the US economy is relatively strong. That could uptick in demand for raw materials like copper, silver, platinum, which are used heavily in manufacturing. So I think there's a demand side story for the metals, and that's why I am, again, still long silver personally. Now, gold doesn't have those same benefits. Gold typically is in more demand when the economy is under threat, as it is considered a store of wealth or a safe haven asset. There's a bit of a different picture there from its other metal counterparts in some ways. Gold is unique. We all know gold is unique. Come on, it's so shiny and so pretty. Now let's take a look at the commitment of traders data brought to you by the Edge Finder. What we can see here is that we have our latest readings and some of our brand new assets that just got added: copper, platinum, silver. You can see all of those listed here. And what we're seeing here is that gold, oil, the Nikkei, and silver, these are your top most bullish rated assets on the Edge Finder in terms of what institutional positioning weighting is looking like. So it's weighted more heavily on this. This is more of a long-term indicator. This stuff is not necessarily a short-term thing, because if you've been watching the channel, you know that institutional money has been long these things for months now. That being said, on the bearish side, you have yen, Aussie, Swiss, CAD, and bonds. And then if we take a look, this is where more traders related stuff is, I would say, is the latest week-to-week filing. And this data shows us an interesting story. In terms of platinum, NASDAQ, copper, US 30, and euro, these are things that are getting, a bid from institutional money. We can see that on the net change week over week. This is very interesting stuff to take a look at how, contracts changed hands. What we can see, for example, if we take a look at NASDAQ, they closed a lot of shorts and added some longs. That's a pretty net bullish week to week move for the NASDAQ. That being said, we also have some sell side stuff. Here is, US oil, yen, CAD, the pound, Swiss franc, and the Kiwi dollar. And remember guys, the Edge Finder currently is 40% off for our biggest sale of the year. It's celebrating 2 years since we launched this fundamental analysis platform. If you have not already gotten a copy, you can currently get 40% off, but actually, if you're watching the stream right now, we'll get you 45% off if you use the very first link down below in the description. So 45% off is available if you chat with us directly. So information for that can be found first link in the description. If you send us a message, we'll help you out to make sure you get the biggest discount possible of the entire year. Also, I thought this was worth mentioning. Take a look at silver, up 2% on the day. Meanwhile, gold is flat. A lot of people look past silver, but again, right now I'd say silver actually looks more attractive in my personal opinion. And for those of you guys who follow some of my options trading stuff, I'm looking for opportunities to sell puts on XLK. I also have my eyes on XLY as well. If this market continues to stay, if it starts to become extended to the downside, I'll probably look to sell some puts in this area here. XLP, not really interested. XLI, I am interested, but it's bounced back here without me, so probably won't be selling puts on that. XLV, I sold puts here, but price bouncing back is of course good for my position, but I also wouldn't mind if price continues to go lower. That means I could get assigned some shares and build a position for my more mean reversion based strategy, that is selling cash secured puts and covered calls. So if you'd like to learn more about that, I mentioned it earlier, the link will be in the top right hand of the screen for you. By the way, if you're wondering how I can trade directly on tradingview.com, I have 3 brokers listed down below in the description, whether you trade FX, currencies, commodities, indices, stocks, options, whatever you want to trade. You can find 3 different brokers linked down below for whichever country you're from that will link directly to TradingView. So if you want to trade directly within there, these are the brokers that I recommend. These are referral links, and if you choose to use them, you'll be supporting my channel. But all 3 integrate directly into TradingView. So check it out down below in the description. Thank you guys for watching. Have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.